Chase Bank has decided to come out and warn UK customers that crypto purchases may lead to account closure. And so in this video, we're going to look at why Chase UK have been sending out these notifications to customers and what you can do as a customer if you do in fact bank with Chase. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys. Available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody, and a warm welcome again back to Enter Crypto with me, Chris Kenyon. Now in this video we're going to be talking about Chase Bank, and this is Chase Bank in the UK, not the US, and it has been warning customers and literally been sending out notifications to customers to say that crypto purchases may lead to account closures. And so I've found an article covering this on a website called BNN Breaking, and we'll just read through it quickly and then we'll see what we've learned and we'll comment after. So, in an unprecedented move, Chase Bank in the UK has begun sending notifications to its customers, warning them that their bank accounts could be closed if used for purchasing crypto assets. This decision has sparked significant concern, especially amid speculation that a similar policy might soon be implemented for US customers as well. A popular finance influencer on TikTok known as Crypto Wendy or Wendio has suggested a possible motive behind this action with the rising emergence of CBDCs, which could be viewed as direct competitors to cryptocurrencies like Bitcoin, and banks may be attempting to stimulate the growth of these decentralized currencies. It's common practice for banks to close accounts without prior warning if they suspect any fraudulent activity. However, this can lead to distress for those who find themselves mistakenly flagged. And to circumvent the potential issues, customers are advised to spread their funds across multiple accounts and to make immediate contact with the bank if an account is suddenly closed. Keeping the account active, maintaining a positive balance, and setting up low balance alerts can also serve as effective measures against unexpected account closures. However, if an account is closed due to inactivity or negative balances, customers may need to open a new account or recover their funds from their state's unclaimed property office. And I wish this news was something new, as in new news, but this is actually old news. Banks have been doing this, especially in the UK, for a couple of years now. Anything to do with crypto, they just close your account down. So much so that I've even heard people, instead of, for example, purchasing with their Visa or MasterCard or debit card, if they want to buy, say, through Binance or Coinbase, they don't use the bank account anymore. They'll transfer the money to PayPal, say, or to Revolut account, which is a crypto-friendly account, and then they'll buy the crypto from there, so that basically the name Coinbase or Binance doesn't show up on the statement for the Santander or HSBC or NatWest account in the UK. And so this is really worrying, and it's just showing us how the banks see crypto. They see it as a threat. It's quite obvious that they certainly don't like people buying it. They've given different reasons for why they don't like people buying it, and it depends which bank you listen to and which day they're saying it on. But it's my opinion that they feel threatened by it, and they don't want to help or aid anybody buying something that would in future possibly compete with their business or even put them out of business. But what a bank will almost always say is two things. They'll either say that they're doing it for your protection, as if you wouldn't be able to think on your own, as if you wouldn't be able to decide what you should buy and shouldn't buy or not. So they're making the decision for you, and they're either limiting how much crypto you can buy, say £1,000 per month, or they're going to limit how much you can buy per day, or in one transaction, shall we say, and they will decide how much crypto you want to buy, even though it's your money. Another reason that they sometimes cite, though this is less common, is that they'll do it in sort of to make sure that they'll often say that they're worried that there may be rules that come out later, and they don't want to fall, regulations, and they don't want to fall foul of those regulations. So by doing that, they're kind of being proactive and stopping people buying crypto or putting limits on people buying crypto, so that if a regulation comes out later, they're already compliant. And I just don't believe that. with a regulation, once it comes into force, that's when you've got to start following. They don't backdate. The government doesn't backdate regulations and say, well, you should have known this, because that just doesn't. That's just not how it works. And a good example of this is the recent advertising regulations around crypto in the UK, which actually come into force tomorrow. And basically any crypto business that wants to operate in the UK has to now give out some sort of questionnaire. I think it's 2 particular questions that they have to ask every customer that wants to buy crypto or sell crypto through them. And it's from that date that they have to comply. So they have to either try to get it in a few days before, and then from that date comply. But they wouldn't be expected to have started this questionnaire, a year ago, before the government even had any plans to do this. So that's just silly. That's always a silly excuse to me. But it's just another excuse because they don't want to say the real reason. And the real reason is that crypto is just far better than the current system. And banks have got a real, they've got a lot to worry about at the moment. Their future does not look good. They've got crypto to contend with, which they may or may not take too seriously. But they've also got CBDCs. And CBDCs, if they go through, will basically make the banks redundant. We will not need, every citizen will be banking with the central bank, which would be in England, the Bank of England. And so there's no need for the other banks, as in the commercial banks. And so I'm not sure how they're going to fit into all this. And I'm pretty certain that they're going to be asking these questions, if I am, to the government. How are we going to stay relevant? Now, in reality, they'll probably come to some sort of deal with the government. They'll be providing liquidity and all kinds of stuff, and they'll be still providing mortgages and loans. But I think the accounts from which your average citizen that spends money with won't lie with the commercial banks anymore. It'll literally just lie with the Bank of England, which will be a completely new way of transacting for the average citizen in the UK. But that's just my thoughts on it. Let me know, guys, what you think in the comments below. Thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.